In a move with few modern parallels, China has slammed its port gates shut to all US-bound ships, a full-scale blockade, not a mere slowdown. The world has rarely witnessed such a dramatic and sudden halt in the arteries of global trade. This is not just a policy shift, it's a seismic event, echoing through every corner of the international supply chain. The decision sent shockwaves through boardrooms and trading floors across the globe as companies scrambled to assess the fallout. Since April 2025, the once bustling ports of Shanghai and Guangdong have fallen eerily silent, containers piling up and ships stranded. The constant hum of engines and machinery has been replaced by an uneasy quiet, broken only by the distant sound of seagulls. For decades, these ports were the lifeblood of global commerce, moving millions of tons of goods every week. Now, they stand as ghostly reminders of a world suddenly put on pause. Billions in goods, electronics, car parts, toys, now sit idle, a stark symbol of a trade war that's gone from tariffs to total stoppage. Warehouses overflow with unsold inventory, and manufacturers on both sides of the Pacific are left in limbo, unable to fulfill orders or receive critical components. The ripple effects are being felt in factories, retail stores, and households around the world. Beijing's message is clear: if the US builds tariff walls, China will build its own, out of stranded ships and sealed ports. This is economic brinkmanship at its most visible, a high-stakes standoff where every container left untouched is a statement of intent. The world is witnessing a new kind of confrontation, one fought not with weapons, but with the levers of global commerce. The global shipping industry is in chaos, scrambling to reroute vessels and manage a logistical nightmare. Shipping companies are forced to make split-second decisions, redirecting cargo to unfamiliar ports and facing mounting costs. Insurance rates are soaring, and delivery schedules are in tatters. The uncertainty is rippling outward, affecting every link in the supply chain. The seamless flow of goods from China to America has been shattered, perhaps irrevocably. What once seemed unbreakable, the intricate web of global trade, now appears fragile, vulnerable to the decisions of a few powerful leaders. The consequences of this rupture may be felt for years to come. This is more than a trade dispute, it's the weaponization of the supply chain. Every halted shipment, every locked gate, is a move in a high-stakes game of economic chess. The world is watching as two superpowers test the limits of their leverage, with millions of livelihoods hanging in the balance. The world now waits, breath held, to see who will blink first. As uncertainty grows, markets tremble, and leaders weigh their next moves. The outcome of this standoff could reshape the future of global trade, and the stakes have never been higher. The crisis we're witnessing today didn't happen overnight. It's the result of years of mounting tensions and escalating tariffs between the US and China, a trade war that has simmered and boiled over, finally reaching a breaking point in April 2025. Each round of negotiations seemed to bring only temporary relief, while underlying issues festered and trust eroded on both sides. In a dramatic move, the US imposed a staggering 145% tariff on Chinese goods. This wasn't just a policy change. It was a seismic shift, making imports from China commercially impossible for most American businesses. The cost of everyday products soared, and companies scrambled to find alternatives. China responded swiftly, enacting its own 125% tariffs on American products. This tit-for-tat escalation effectively shut down trade between the world's two largest economies, even before the ports officially closed. The ripple effects were immediate, with supply chains grinding to a halt. The industry's deadline was set, April 9, 2025. After that date, demand for goods collapsed almost overnight, and shipments simply stopped moving. The world watched as the flow of goods that powered global commerce came to a sudden standstill. Interestingly, the halt at Chinese ports wasn't the result of a direct government order. Instead, it was a swift and brutal market reaction to tariffs that instantly killed demand. Ships sat idle, and containers piled up with nowhere to go. Previous rounds of tariffs had already strained businesses and consumers, but this was different. This was a kill switch, an abrupt end to negotiation, replaced by a full-blown economic war. The consequences were immediate and severe. Both sides have now abandoned any pretense of compromise, each betting that the other will suffer more. The atmosphere is tense, with negotiators and executives walking away from the table, leaving uncertainty in their wake. The silent ports and stranded containers are the most visible signs of this high-stakes gamble. the world's busiest shipping lanes have become eerily quiet, a stark reminder of how interconnected and fragile global trade truly is. As the dust settles, the true costs, economic, social, and political, are only beginning to emerge. The world is left to wonder, how long will this standstill last, and what will it take to break the deadlock? China's port shutdown targets the US, but its own economy is suffering first and hardest. Export powerhouses like Zhejiang and Guangdong are reeling, factories silent, warehouses overflowing, workers facing layoffs. China's shipments to the US, worth $439 billion in 2024, could be slashed by more than half, threatening a 1 to 1.5% GDP drop. For a nation built on exports, this is a seismic shock. The human cost is immense. Millions of jobs in manufacturing and shipping are at risk. The government faces a daunting challenge, managing domestic fallout while waging a trade war abroad. China's export-driven model has become its Achilles heel. The decision to close the ports was a powerful statement, but it came at an extraordinary price. How long can China sustain this self-inflicted pain? The Chinese port shutdown has triggered chaos across global shipping, far beyond China and the US. Dozens of voyages have been canceled, slashing container capacity by nearly 40%, a void that can't be filled. Ghost ships and empty schedules haunt ports like Los Angeles, where thousands of containers simply won't arrive. Major brands are pausing shipments, unwilling to risk goods being stranded or hit by tariffs. The global shipping network is thrown off balance, with overcapacity in some lanes and shortages in others. The intricate dance of global logistics is in disarray. The full impact will take months to unravel. For now, the world's most important supply chain is broken. For Americans, the trade war's impact is about to hit home, literally. With shipments halted, store shelves are running dry, especially as the holiday season approaches. Scarcity means higher prices. Electronics, toys, furniture, and clothing will be harder to find and more expensive. Companies face impossible choices: absorb tariff costs, negotiate with struggling suppliers, or pass costs to consumers. Retailers, already stretched thin, expect a 10% drop in port volumes and lost sales. The American family's budget will bear the brunt: rising prices, postponed purchases, and a frustrating holiday season. The closure of a port thousands of miles away now means tough choices at the checkout. In a globalized world, no one is insulated from a disruption this big. Empty shelves and higher prices are the daily reminder of this escalating conflict. As if the Chinese shutdown weren't enough, U.S. ports face a perfect storm of crises. A federal government shutdown has furloughed key maritime regulators, stalling port operations. Typhoon Ragasa and China's Golden Week have further delayed Asian shipments, compounding congestion. U.S. ports swing from a surge of front-loaded imports to a sudden drop-off, all while battling administrative paralysis and weather chaos. Port workers and logistics firms are stretched to the limit, facing volatility and uncertainty. The system is under extreme stress, tested by overlapping challenges. America's supply chain isn't just broken, it's under siege from all sides. The world stands at a crossroads. Will we choose to de-escalate, or are we on the verge of plunging into a new economic Cold War? The stakes have never been higher, and the decisions made now will shape the global economy for years, if not decades to come. If tariffs and port closures persist, companies will rush to move supply chains out of China, a costly, years-long process that will disrupt established networks. This shift could mean higher prices for consumers, delays in production, and uncertainty for businesses large and small across the globe. In the short term, we could see more business failures, job losses, and economic pain on both sides of the Pacific. Small businesses may be hit the hardest, while workers face layoffs, and communities struggle to adapt to sudden changes. The best hope is immediate de-escalation, suspending the harshest tariffs and returning to negotiations. Only through open dialogue and compromise can both nations avoid a downward spiral that would hurt millions. International pressure could help push both sides toward compromise and global stability. Allies and trading partners are watching closely, urging restraint and cooperation to prevent a wider economic fallout. If diplomacy fails, we face fractured trade blocs, rising tensions, and diminished prosperity. The world could split into rival camps, with new barriers to trade and investment and a chilling effect on innovation and growth. The choice is stark: escalation and mutual ruin, or the hard path of dialogue. It's a test of leadership, vision, and the willingness to put long-term stability above short-term political gain. The silent cranes in Shanghai and empty shelves in America are a warning. These are not just symbols, but real consequences that affect everyday lives, from factory workers to families shopping for essentials. The time for bold leadership is now, before the damage becomes permanent. Leaders must act with courage and foresight, recognizing that the world is interconnected and that cooperation is essential for shared prosperity. The world is watching, waiting for someone to step back from the brink. The next move will determine not just the fate of two nations, but the future of the global economy.